All right, guys, I can't think of a better time to talk about the Bitcoin halving than when the price of Bitcoin is falling. Might be finding some short-term support too. Anyway, that's not this video. Let's talk about the halving. So on the right, you'll see a Bitcoin halving clock, bunch of different versions of this. But essentially, this is saying there's 86 days, roughly April 18th, the halving will occur. What does that mean? That means that the amount of new Bitcoin that gets issued every block and every day is lowered. Right now, per day, we're averaging about 900 Bitcoin being produced. After this date, and again, this date will probably shift. Maybe it's earlier, maybe it's later. I won't go into how all that stuff works, but just trust me, it works that way. So this date could shift, but once that happens, once the halving occurs and that block passes, the new issuance is programmed in to be cut in half, and it'll be down to 450 a day. That has dramatic impact on the price of Bitcoin over the long haul, even months later. And you can see that, and we'll show that in a second. But in this video, the goal is to talk about what Bitcoin is, explain how the impact of Bitcoin causes the price to go up, and then explain how this cycle is so much different than the ones that came before it, and why that's a super positive thing if you're investing in Bitcoin. And I personally believe, and again, I'm not a financial advisor, I'm a high school dropout who just happens to be a retired multimillionaire by doing this. So take that for what it's worth. But I think everybody should have a 5 to 10% allocation. And I hope by the end of this, you'll understand why. All right, so this next chart, here's what I wanted to show you. The inflation rate of Bitcoin over time. You can see how initially, if you got into Bitcoin, and this happens with a lot of altcoins too, massive amounts of issuance in the beginning, huge amounts. Look at this. The inflation rate was over 50%, maybe 100% in the beginning. Then it dropped down. Before the first halving occurred, the inflation rate was about 25%. So that's not a great rate. The US dollar, I mean, that's worse than the US dollar. The US dollar, and these are official numbers, these are probably optimistic, but 2021 we saw a 7% inflation rate. 2022 was 6.5. 2023 it's dropped a lot, down to 3.4. That affects different assets differently, but again, you can see how much that has changed over time, and you can see that inflation rate the last couple of years has been pretty high, and I'll make an argument for why it's going to get even higher in the future. Even if the rate of inflation is going down, why the money printing is going to continue, which will devalue your dollar. But let's go back here. I digress. So each halving, you can see here, we were crazy numbers the first time, almost unmeasurable because they're so sporadic and just differ so much. The second halving, though, you can see where it was roughly 10% inflation a year. And then the next halving, you can see where we dropped down to roughly 5 or a little bit lower. And then the next one, this only goes to 2020. So the next one was down to under 2%. It was like, we were like 4.5%. And then we were down to like 2% under gold, under the inflation rate of gold. This next one will be about 1%. So we already have less new Bitcoin being created every year than what gold has. And gold is a black box of mystery. We never really know how much is being mined. It would be very easy to hide the numbers. That way you could try and get it to where people continue to purchase and maybe it was 3%, maybe it was 4%. We just don't know. And if we find if there's a rock that we can find, an asteroid, and there's a bunch of gold on it, the rate of inflation could go up quite a bit. So gold is not fixed. Bitcoin is fixed. That's a concept that you need to understand. And you need to understand that Bitcoin is already lower than this, and that this next halving will be under 1% inflation, which is a crazy low number. It's so crazy low that if you look at the US dollar here, and you look at the inflation rate of it for all these other years, it was at least double, and more recently quite a bit higher, 7x higher than what the inflation rate will be for Bitcoin after April. 6, these are just crazy numbers. It shows that the dollar is being devalued while the value of Bitcoin is maintaining fairly stably. Here's another chart I wanted to show you. It shows the Bitcoin inflation versus time, and it also shows the monetary base. What it means by monetary base is the base of money that's being printed and created. And so you can see how the monetary base in the money printer is just going up dramatically, but the issuance rate of Bitcoin is dropping every cycle. So you have this mechanism where the money supply expanding at an ever growing rate is going to make it to where the Bitcoin becomes more valuable, because the Bitcoin, the rate of inflation is dropping and becoming negligible. And the only way that this formula would work is if there was interest in Bitcoin. And if you look back all the way through here, and you can zoom into different time frames, this thing will continue to arc. You just have to adjust the time frame, but you can see where Bitcoin has not lost interest. The number of new addresses, I could show you ones with like a certain amount of Bitcoin in them. They're all pretty much the same. They have this line where you can see demand is going nowhere. It's just going up. It's not changing, I should say. It's just going up. And that won't change because money is continually being printed at an ever aggressive rate. Right now, we have an election in the United States, but not just in the United States. The world has more elections than it's had like historically in a very long time. So when that happens, the money printers go burr and markets usually go up. You need to know that. And we've got a record number of elections. So we're looking at the world looking to expand the monetary system even more. And while the rate of Bitcoin is getting lower and the issuance is lower, it's a beautiful formula for making money. Now, I actually want to jump, let me see here. I want to jump to a different number. I wanted to show what that's looked like historically, right? So we can see in here, each vertical blue line is a halving event. You can see first halving, second halving, third, and this is the fourth that's coming up. Now look at what happens. Look at what happens. You can see there's a breakdown each cycle, but look at what happens after the halving event. Up. A little bit of chop, up. Huge gains in this amount of time. Huge. I mean, look at the base of this. That cycle, which I got to participate in a large amount of, that cycle, the halving happened in the middle of 2016. There was 11,771% return from the bottom. Wow. People made a lot of money there. This last cycle, it was 2,065%. So you got 20x just off of Bitcoin in this last cycle. And that was, I will argue, a neutered one. But let me get back here. So Bitcoin had second one up, third one up, but this one got neutered. And the reason I say it got neutered, you can see where it double topped up here. It would have went higher, but the Fed started to talk about aggressively raising rates at the highest pace in history. And we saw inflation skyrocketing from printing 40% of the money supply that's existed since this country was founded, just from the pandemic to now. So that killed this market. The inflation and the threats of having to tighten monetary policy and do quantitative tightening killed this market. It didn't just kill this market. Look at what Tesla did. Look at what Meta did. Look at all of fintech. Look at meme stocks. Look at SPACs. Look at everything got crushed. Everything. So this would have went higher. I think we could have hit over 100,000 this last cycle. So again, after the halving, it goes up. And the reason it goes up is with new supply being halved and interest actually getting stronger after the halving. Because you know what else happens? And I don't have a good chart for this, but Bitcoin miners slow down on their selling, because once the halving happens, they want to hold that Bitcoin because they're getting half as much as they got before. And they don't want to sell it because like a week earlier, they were making twice the revenue. So they stop selling. You know what else happens? I don't sell. Nobody sells. They don't sell because they're smart enough to be able to look at history. They've been here for the ride. They get it. They're hodling. Right now, I think the amount of Bitcoin that hasn't moved is like at 72%. Like, these people are stone cold diamond hands. They know the value of it. Michael Saylor from MicroStrategy knows the value. He's put everything he has into it and continues to put more. So after the halving, you see the new supply get lowered. You know the monetary base of the world is expanding because we're printing more money now than we ever have before. And then the miner stops selling and everybody else stops selling. But this time is different. This time we have Bitcoin ETFs. Coinbase is a custodian for 9 of these. And this is crazy what's happening already. We've seen $3 billion in inflows, and this will ebb and flow a little bit. Might vary a little bit in the weeks and months ahead. But after the halving, it's going to kick in. And what I wanted to show you here, let me zoom in. I just realized this is really tiny. Let me get much closer here. There we go. That looks better. So in this post I just did today, it talks about what Eric was the guy that was really covering the Bitcoin ETFs. He's brilliant. On January 18th, just this last week, he was talking about how there had already been $3 billion in inflows into these ETFs. And that includes the outflows that we're seeing from Grayscale because of their poor decision making and keeping their fees at 1.5%. I think that a lot of that is probably just trickling into these new ones. But I do think that we're seeing some outflows too, because people made a ton of money off of GBTC this last year, and we're in a new year, right? We're in a new year, and this is the time where you sell your big winners so that you can diversify into different things. And so people that might have been here for that ride might be taking a breather and think that Bitcoin's overvalued. They're selling, and maybe they're not buying back right away. So I think you have some outflows there, and then you also have outflows from what Coinbase has done. Coinbase is the custodian for 9 out of 11 of these. And it's important to realize that they built up a reserve before these ETFs went live. Think about it. If you're an ETF company like BlackRock and you manage the largest amount of funds on earth in any fund, you're going to say, hey, can you guys make sure that once these ETFs go live, that Bitcoin's price is reasonable, and that if we have inflows coming in, the price doesn't just skyrocket to where other people are like, whoa, I don't want to get on yet. This is a little scary. They want this thing to go down initially. They want people to buy into it, and they want them to buy the dip. And so Coinbase has been selling their reserves, but soon they're going to have to start pulling from spot. And the reason they're going to have to do that is we've already seen $3 billion. And this is as of the 18th. It's more probably now that have flowed into these new ETFs. And if you do the math and you crunch the math on that, for current supply, if we were to do the math on that, that would be 77 days of Bitcoin, of the new supply being consumed. So 77 days of Bitcoin miners mining, and poof, they just got it. They just got it in like a little over, the first 4 days, he says in here. The first 4 days they consume that. Let's even just say a week. And we're consuming 77 days. What's crazy about this number is that after the halving, that would be 154 days of new supply from the Bitcoin miners. So 40% of a year in a week? That kind of demand is absolutely insane. Like, I'm not going to cuss. It's really insane. It's really insane. And I want you just to wrap your head around that number. And this is before the halving has had its impact. The halving hasn't done anything yet. Miners haven't stopped selling because they're like, I'm not selling at this number. The new issue hasn't dropped from 900 to 450. That hasn't happened yet. But when it does, and with this kind of demand, 154 days worth of supply, new supply in a week, it's going to get crazy. And here's another reason why I think it's going to get crazy. There are ETFs for Hong Kong that could be happening. I thought I had a slide for this. I'll try and find it. Maybe I can insert it later. But there are ETFs with Hong Kong that could be happening as early as Q1. And there's a multitude of those. And with China deteriorating and seeing capital outflows, I'll tell you what, they definitely want to preserve some of that capital and give people a way to preserve their wealth, especially since their money printer is going to be going burr too. So we have Hong Kong going live, basically China. And then on top of that, South Korea now is talking about their government is encouraging their financial industry or their financial portion of the government to create and approve, or I should say approve, Bitcoin ETFs so that they can be a part of this market too. And then you already have some in different parts of the world like Canada and Europe. So we're seeing a huge amount of money and potential from boomers, the people that are older, the people that have all the money. These guys have over $100 trillion in wealth. And they are now looking at coming into this market to preserve their wealth. And there's reason to do it. I just showed you those charts. The government is printing money at a rate that is more than we've ever seen in modern history. 40% in less than 4 years. So 40% of the monetary base. So, and that's not going to get better. You look at government spending, and we could be having this next year, we could literally be spending more on interest on our debt if we don't start lowering rates aggressively than what we pay for our entire military budget. So if you think that the government isn't going to print more money, you're confused and you're wrong. They will. They'll have to. They have to lower rates, and then they're going to print more money. If nothing else, they can print more money. And the reason they can do that is because China is exporting deflation to the world. Their economy is in free fall. The real estate market is falling apart. Capital outflows are rampant. Businesses are leaving to diversify away because of threats of war. So as they leave and exit, and those funds leave, China is falling apart, and they've got to do everything they can to try and survive. And right now you're seeing prices drop on goods because they need to sell them so that they can keep people employed. So across multiple sectors and industry, we're seeing deflation. We're seeing, and if nothing else, just because the demand from China isn't as great, and they were the manufacturer for the world. So they don't need as many commodities and supplies to build things. They don't need to order as many parts. So again, with their demand in decline, governments, including China, including the United States and every other part of the world, parts of the world where we have a record number of elections with presidents that want to get elected again, are going to have to print tons of money, tons of effing money. There, I didn't curse at all. How proud of you of me. So if they're all having to print money, and if we don't have a risk of inflation, but instead deflation, and believe me, that is a very real risk. If you look here at Trueflation, you can see that we were so worried about inflation. They're historically 30 to 60 days ahead of the Fed because they pull from APIs from every major company in the world. Okay, every industry in the world. Or I'm sorry, in the United States specifically for this, but they cover other districts. My whole point is they pull all of this data in through these APIs, so they get it in real time. They don't get delayed crap like the government, where it could be 30 to 60 days behind, and maybe it's manipulated a little bit because we want to reflect a certain picture. These guys don't care. They have the incentive for them is to post the truth. And I made tons of money in 2023 because I followed this. I saw inflation coming down. I knew it wasn't a real issue. And I posted about that all the time. And I made 700% from that. So again, we're seeing, as this chart is showing, a risk of deflation. We're not worried about hitting our price target at 2%. We're under it. And that's not good. So I see the Fed starting to lower rates, which expands the economy and makes it stronger. I see quantitative tightening being done. Actually, they've been doing stealth QE or easing for a while. They've basically been using the reverse repo as a way to be able to push more money out. And they had the BTFP, the bank term funding program, or buy the effing dip that people like to call it, that was also making sure that, banks are safe and everything is okay. All these things will continue because they have to. And at the same time, we will need to print money in order to be able to get the economy going again, not just here, but the entire world. And as that's happening, you want to be in the asset that everybody is getting into. And this is an example of that. This covers all of crypto, but look what happened the first week. Look what happened the first week here of this. You can see how it was huge the first week of the ETF for inflows for the crypto sector. And that is continuing steadily all before the halving happens, with the greatest amount of printing in history. We have the greatest amount of potential inflow coming from the people that hold all of our wealth. And they're finding out, and they're learning, and they're not just learning from us, they're learning from Larry Fink, the CEO of BlackRock, the biggest investment firm in the world, is telling them that this is digital 2.0 gold, and that if the world goes to shivets, this is what they should be holding. Everybody's going to be saying that. This is the narrative. This is the narrative for the next year and a half. You need to understand that so that you can make money. The double halving is upon us. We have a halving of the issuance, and we have inflows that are going to be 2 to 3x greater than they were before. I don't even know the math. I've heard up as much as 30 from brilliant people. Brilliant people. And they're saying that there could be 30x inflows. I mean, even this rainbow chart here. Let me see if I can refresh it real quick. This is called the Bitcoin rainbow chart. It shows historical peaks when you want to sell out of them. Now, keep in mind, the last one got neutered, right? The last one got neutered. We should have been like in one of these last 2 layers for it to die off. And you can see how well this has worked in the past, right? But this one got chopped because of the Fed. We can blame them. But what is it this time? So if we look roughly when these things peak, let's say we have an early peak. Let's say right about here. Other ones were a little bit further out, but let's say we get an early peak. What are we looking at? Let's just do that. Let's do an early peak. We're looking at potentials for, conservatively, $145,000 to upward of 334. Bitcoin is at 40,000 right now. Oh, and we could be bottoming on Bitcoin right now, at least short term, if not longer, because when I look at this 4 hour, I like what I'm seeing. I like what I'm seeing. It looks like we're trying to get back above this. Maybe we don't. Maybe we reject, chop down, and go down further. But what I'm saying is, we're looking at a time where we've got expanding monetary supply. We have a reduction in the greatest store value of all time. It's immutable, which means the ledger can't be altered. It never has been, 15 years. It's transportable, way easier than gold. Try and move like 100 pounds of gold and see if you can fly out of the country. They won't let you, but you can have a hardware wallet or even just a piece of paper, or know the key in your mind and bring it anywhere on Earth. It's more transportable than anything else. There have been people try moving $200 million of gold. See how much that costs you. Try moving $200 million worth of just dollars anywhere on the Earth. Banks will bend you over and take all your money. Try bringing that to like an African nation where everybody's got their hands in the pots just between here and there. You can't, not effectively. People have moved over $1.5 billion for as little as $5. $5. So you have a store of value that's more liquid than anything. The US dollar, think about this. The US dollar is the only trading mechanism in the world that's commonly used for currency, right? Over 90% of trade is done in dollars. So the world has the internet, but which can be used virtually everywhere. Sure, it's censored in a few places, but it's basically everywhere. But we don't have a currency that can be used everywhere outside of the US dollar, which is printed to oblivion. And yet Bitcoin can be moved anywhere on Earth, and you don't have those same concerns. You have, if anything, you have the greatest capture of wealth on the planet. So again, I would just highly encourage you, do your research on Bitcoin. This halving is going to be epic eventually. Yeah, look at this already on this chart. I'm going to zoom in real quick because you got to see this. So I was just saying this a second ago, that it looked like we could actually be finding a short-term bottom. We've got this descending triangle. That's beautiful. And now we're trying to bust up and get back up here towards this fib. Or I'm sorry, just towards the previous the support line. If we can do that, and we can even break up to here, then we could be headed higher. Or we chop for a while. It doesn't matter. April is so close. We're less than 3 months from one of the greatest financial events in modern history. And I'm not saying that lightly, and I'm not being overly dramatic. If you don't understand Bitcoin, learn. This is your This is your lifeboat if the world goes to shivets. This is it. There's nothing else. The bond markets won't save you. You think that the government-backed debt is going to save you? Do you really think that? Do you really think with the money printing that we're doing and the uncontrollable budgets that we have all around the world, China's got double the debt to GDP of the United States. That's not even factoring in shadow banking. You've got to have something to save your wealth. And then at the same time, you can get rich. I don't know what to say there. Some of the stuff I could see, again, Bitcoin 4xing this cycle. 3x is too low, in my opinion. 4 is more likely, maybe at 5x. Maybe it's 6. Again, that thing said almost 7. So the rainbow chart and a number of other tools. There's ones that go up to 1 million. I'm conservative. I think 150 to 250 is a more appropriate range. Maybe I'm all out by 150. I don't know. I do have a hardware wallet stack that I always keep. And honestly, I'm probably going to keep more of this halving than I ever have, because the way things are going, I don't know if we're ever going to see another halving quite like this again. There'll be drawdowns and all this other stuff, but this could be the last one, in my opinion. And don't you want to own the best store of value on earth? Even a 5 to 10% allocation. I don't know. Hopefully you've gotten something out of this, and you're able to better understand why Bitcoin's inflation rate being 40% of gold is a good thing, and why the money fiat printers of the world are a bad thing. They can be a good thing to hold for a period of time. I won't say that the dollar is trash. People say that. I don't think that's true. I think that there's times where you want to flight to the dollar. But the other thing I would be fleeing to if it wasn't the dollar would be this. And if the world is really going to shit, it would definitely be this. All right, I've dragged on for long enough. I hope you guys have a great day. I hope you got a lot of value out of this. I'll talk to you later. Bye.